There's been a very welcome announcement from the Banking Association regarding the 6-month deferred home loans. In case you missed it, due to the continuing COVID situation, banks are extending the timeframe for a further 4 months, and for Victorians potentially longer. Some 800,000 Australians have taken up the option to pause their repayments through this really unique time. Now, that is certainly a huge number and sadly reflects the number of Australians who are concerned and worried about their financial future. Fortunately, today's announcement will have gone some distance to giving those affected some breathing and some thinking time. Obviously, the arrangement is a deferment, meaning that you are still accruing interest on your loan for the period, and at the end of the day, the piper will of course still need to be paid. Now, I am not a financial advisor. However, as stated in the press conference, if you are in a position to make your payments, this is the best financial move in the long term for you. Paying less is always the best option when it comes to interest. However, for those who can't in the short term, but who know that their situation will improve at the other side of this latest lockdown, this has effectively bought you more time to reset your budget and importantly keep the roof over your head and food on the table. Now, the picture painted of banks more often than not is that of the greedy wolf. However, I think we can be grateful that we have strong banks. Banks that came into this situation well equipped and well funded to be in the position now to basically give back to their customers and genuinely work through this crazy time with us all. So what should you do? Well, this depends on your personal situation. The most important thing you shouldn't do is not talk to your lender. There has never been a time when communication has been more important, and given the current climate, even the tax office is being obliging. Anna Bligh, the CEO of the Australian Banking Association, commented, "This next phase of bank support will avoid a cliff for customers in September and give them the breathing space they need to work with their bank and get back on their feet financially." So what does this actually have to do with real estate? And why am I talking about it here with you today? Since May 2020, I have been commenting that the current COVID market has seen days on market, so the time it actually takes to sell a property, stretch out, but that prices haven't dropped as such. Rather, they've softened with less of those spiky high prices being reported. This is what I was predicting to continue in the short term. However, we couldn't even attempt to be certain about what would happen in September when both the home loan pause and JobKeeper support payments were scheduled to finish. And of course, lockdown take 2 wasn't a thing then either. So what does the real estate landscape look like now? Great question. And to be perfectly frank, we don't know yet. Since the announcement, we saw an immediate spike in inquiry and a sense of urgency from those who have already sold, who obviously need to find a new home, but also let's not forget about those who are in essential work and have a desire to get into the market. The first 2 weeks of lockdown are likely to still be reasonably active as they were the first time around. It is highly likely, however, that there's going to be a little bit of a lull in activity in the following 2 weeks. But the last 2 weeks of lockdown are likely to see, from where I'm sitting, an increase in activity as we head towards the traditional spring market on the calendar. But will spring be spring? Probably not. The level of new listings is likely to remain lowish, which is not what we were actually anticipating if the banks had not made their announcement. So if you were or are planning to sell in 2020, what do? The simple answer is that if you have a reason for selling that is timelined, let's say a job relocation, school zone needs, or maybe the addition to a family member, then sell when you are ready. If you want to maximise the price, aim for being on the market during this last 2-week period of lockdown. So around the beginning of August or as close to it as you are able. If you're buying again into the same market, you could potentially be quite financially advantaged. If, let's say, you need a bigger home and will be trading up, a slower market is genuinely a great time for anyone doing this to make that move. If you aren't on a timeline, you may just want to monitor the next 4 weeks closely, like I'm going to be. We are headed into uncharted waters yet again. until we see what the economic impact of the second lockdown really is. But on the upside, we are not in uncharted waters with how to sell during periods of restrictions. In fact, we have never been better equipped to guide you through a sale under these conditions and still achieve the best possible outcomes for you. Earlier this year, I wrote a book, Sell Well for More, which includes a 30-day action plan to prepare your home to sell for a higher price than what it's worth right now. And with the timeline that we are currently looking at as the new sweet spot, this book should become your best friend if you are serious about selling for the most amount of money possible in 2020. So if you would like a free PDF copy of my new book, just email me at jo, that's J-O, at jrealty.com.au. Let me know you'd like a copy and I'll have it to your inbox within 24 hours. Thank you for watching. Take care. Stay well. Talk soon.